Okay, good morning, everybody. I'm Sally Durstein, and I lead our team at the Family Business Center. I'm delighted to welcome you all to our fourth webinar in a series that we're producing to help business owners navigate all the uncertainties around COVID-19. Well, this indeed has changed our landscape. COVID has changed our home lives. Most of us are probably working from home. It's changed the way we do family, the way we do business, the way we connect. And one of the things I've been thinking of, my grandparents used to talk about the Great Depression. I wonder if I'll be talking to my grandchildren about the years of great adaptability. I think these are times that we really need to be adaptable. And as I've been Zooming with you and with other business leaders and shareholders and family members, I've been inspired by your ability to adapt and your emotional strength and also your generosity. So just a note before we begin, we will be recording this and it will be available to you on our website as well as the slides. And we will take questions throughout. Jared, will you talk to us about that?
Yeah, if you haven't been on one of our webinars yet, or not familiar with Zoom, if you're on a desktop or laptop, at the bottom there should be a bar with different icons. There's one that says Q&A. If you could submit your questions through that rather than through, say, the chat, that would help us facilitate that process. If you're on a tablet or a phone, it may actually be a drop down at the top, and you may need to touch the top of your screen for that to come down, and then you can hit that Q&A. You type your questions in and submit it. And then Sally will be asking our panel of experts here toward the end, and we'll be able to get to some of those.
So we appreciate the questions that already were submitted, that were already asked, and really appreciate having Bob Nagel and Mike Meehan here, two very thoughtful and experienced business lawyers from Fox Rothschild. And they're going to be talking to us about navigating the COVID-19 landscape in a family business. So they're going to be basing this on the questions that you've asked, questions that they have received from some of their clients. And as you might note, we've had experts on here that have been presenting, almost as soon as legislation has come out. Now, there's been lots of changes. And so we'll be hearing the most up to date today. I'm pleased about that. So just the word Bob Nagel, he's a partner in the labor and employment practice at Fox Rothschild. And Mike Meehan is a partner and is in the financial services practice. And they've been EDU sponsors, and we appreciate who they are and what they do. So I'm going to turn it over to them, turn it over to Bob first at this time. Welcome, Bob.
Sally, good morning. Good morning, everybody on the line. Jared, are you going to pull up the slides for us? Just as we, by way of introduction, maybe a little further background, I think looking at the list of attendees, I think I've met some of our group today at various events, either at Radnor Country Club or other events. So it's nice for those of you I've met before, nice to see you again virtually, as it were. A little bit about myself. I've been practicing for about 22 years. I'm based in Montgomery County, working out of the firm's Bluebell office, advising employers of all sizes on all aspects of labor and employment law. As pertains to today's discussion, this really hit home for me, I would say the week of March 15, when we were sent home following a partners meeting because someone in our office had presented as symptomatic, and we were told that everybody needed to leave following the meeting, and that was even before the governor's initial shutdown order, which kind of superseded any business by business decisions on that. But also on that day, I had gotten a call from a client who is a multi-state retailer. They operate retail stores from New Jersey down to Virginia, north of 1,200 employees. And they saw what was coming. They knew they were going to have a significant reduction in foot traffic. This, again, is before the mandatory shutdown orders. And over the span of 3 or 4 days, we cycled from, what can we do? What do we have to do? Okay, now we have to do certain things. what do we do with respect to rapidly downsizing our 1,200 plus employee team in 4 different states? So Jared, maybe we can go to the, that's our disclaimer. These are the topics for discussion today. I'm going to start off by talking about furloughs, layoffs, and other restructurings. Then I'm going to flip it to Mike for a discussion about the PPP loans that are available under the CARES Act. Lots of questions around that. Mike's going to talk about some other sources of financial assistance that the federal and state governments have made available. And then I'm going to take back the mic and talk a little bit about paid sick leave and paid medical leave benefits under the FFCRA, and particularly some recent guidance that the Department of Labor has issued since a webinar on this topic, I think, that Sally and Jared facilitated I think it was early last week. Fast moving environment. So Jared, why don't we go ahead? Thanks. So given that most of the center's membership is based in PA and operations are largely based in PA, and I think most of our group is non-union with maybe 1 or 2 exceptions, I'm going to sort of present the next couple slides through the lens of you're a non-union employer in Pennsylvania. And whether it was the middle of March or earlier this week, or maybe you haven't done it yet, but I think any business of any size, family businesses certainly, are considering what are we going to do with our people? Maybe we've been deemed non-life sustaining, we're actually closed. Maybe we are life sustaining, or we applied for a waiver and got one, and we can operate, but we don't need as many people as we typically run with. What are our options to sort of downsize the workforce? And the truth is, there are a lot. There are several. This is not, if you don't have a union contract and your employees, and I'm sure most of them don't, have individualized employee contracts that kind of limit your flexibility in terms of reducing the amount of work or the amount of pay you have to provide to them. Most employees in Pennsylvania are at will. And with at-will employees, frankly, management has a lot of flexibility. Terms that are being used. Furlough, as that term, I think, is properly understood, it defines a temporary layoff, or put another way, a forced unpaid leave of absence initiated by management. Furloughs can be partial. In the sense that we're moving you from 40 hours a week to 20 hours a week, or you're going to only work 2 days a week instead of 5 days a week, really just a reduction in hours. Or it can be an outright removal from the schedule for some period of time. And I've talked to a lot of clients, a week or 2 ago when we were still in March, the thinking was, okay, let's do a temporary furlough through the end of April. We'll see where we are, in the middle of April. If we need to extend it, we can extend it. If we're fortunate enough that we can bring people back sooner, you can do that. Again, this is the beauty of at-will employment in Pennsylvania. The employer has a lot of flexibility, discretion, and control, really, in kind of metering when its employees work and how much they work at any given time. So don't be afraid. Don't be afraid of predicting in a notice of a furlough, for example, about, we're optimistic we can bring people back by X date, but given the fluid nature of the situation, that could change. You're not committing you really have to try to screw it up to create a binding contract, right? That someone could really hang you on. So your employees, they want, we all want hope, right? We all want, to know that, hey, is the expectation, is the baseline that you're hoping to bring me back? And if so, when? It's okay to tell them that. It's okay to tell them that. Layoffs. As used in this discussion today, that should best be understood as a permanent separation or an actual termination of employment. It's kind of a euphemism for a termination due to exigent economic circumstances and not like the fault of the employee or some performance issue. Reductions in compensation, I had gotten questions about that. Those frequently go hand in glove with furloughs or staff reductions. Sometimes, the senior people, the senior management team might take a haircut, anywhere from 10 to 50%, depending on the circumstances. There's obviously leading by example. I remember about a month ago now when I heard United Airlines was talking about curtailing service like 70% across the nation, and their CEO stepped up and said, I'm taking a 50% pay cut first before I ask any of our team members to take, furloughs or pay cuts. Each business is different. Each management team can make their own decisions about what makes sense. From a legal standpoint, again, unless the employee has an employment contract that guarantees their compensation during the term of the contract and doesn't allow for any sort of midterm adjustment. And I have had a couple clients in the pharma biotech space where they've had contracts for their sales folks that don't really seem to allow for a reduction in pay. That's a little stickier. But for most of your folks, at-will employees, you can broach the subject of pay reductions. You can in fact impose pay reductions over their objection. You just can't do it in the same period the pay period that you're in now. So if you're in a 2-week pay cycle and the current pay cycle ends on Sunday, it's a little late in the day, Thursday, trying to, jam a pay cut down next week, but under the law, you could. Be sensitive, however, to Fair Labor Standards Act compliance issues for salaried exempt employees. Hourly non-exempt employees, of course, under the law, you are required to pay them for all hours worked, but the law, as I've said, doesn't require that they get 40 or 35 hours a week. If you don't have that amount of work to give them, you can reduce that schedule all the way down to 0 if need be. For your salaried exempt employees, it's a little trickier. I think kind of the unsophisticated, so-called barracks lawyer wisdom is that, you can't reduce the pay of salaried managers. You can't change their pay. That's not true. If they don't have an employment contract that guarantees that rate of pay for the length of the contract, you can reduce their pay. It'd be nice to have their agreement, but if they're not willing to agree to a reduction, subject, of course, to the standard under the federal law for maintaining that salaried exempt status, which I think now is about $35,000. It changed at the beginning of the year. I've had the conversation with clients about telling salaried exempt employees to take a haircut. You like to define it, for 30 days, the next 2 pay periods, the next 4 pay periods, and then we'll see where we are. Give yourself flexibility to extend it if needed. No one loves that, but no one loves the situation we're in right now. The other piece is, well, what about I can't reduce their pay if they're working less time? My answer to that is yes, you can. Because the real legal significance of salaried exempt status under the FLSA is that you don't have to pay those folks overtime, meaning time and a half, for hours work over 40 in a week. So the beauty is, 40, you can make your managers and your HR director and your IT director work 45, 50, 55 hours a week. You don't have to pay them extra compensation. That's assuming you're paying them a fixed salary to cover all of that time and they're really exempt. Well, if they're not working more than 40 hours a week, you don't really have liability exposure for treating them sort of as hourly in any given pay period if they're only working 20 or 25 hours a week. So if you're being told, oh, I can't reduce their pay because that'll destroy the exemption, my answer to that is no big deal, as long as they're not actually working overtime hours in the week or the pay period in which you have sort of converted them to non-exempt. So that's just something I wanted to flag because I think there's a lot of confusion and maybe even misinformation out there about that. If there are additional questions about that, we can take them later. But Jared, let's keep going. So already talked a lot about furloughs. A furlough, doesn't matter whether it's a furlough or a layoff or just a flat out termination, those employees are going to be eligible for unemployment. If they're not working because you don't have work for them to do, whether it's because you don't have customers or business and you made a decision to close, or Governor Wolf made the decision for you, if your employees are not working because of a lack of work, they are eligible for unemployment compensation. As we all know, those benefits are much richer now than they were prior to the CARES Act being enacted on March 27. The top rate for unemployment comp in Pennsylvania, I believe, is about $573 a week, with the additional kicker from Uncle Sam of $600, employees can earn as much as $1,173 a week in unemployment compensation, which is a lot of money. I tell clients, don't feel bad if you have to lay people off. They're not going to starve if they collect unemployment. There should be no stigma. You know, it's nobody's fault, right? It's nobody's fault. Don't be shy about laying people off because you don't have anything for them to do. Now, Mike's going to tell us in a few minutes about, well, wait a minute, you know, for CARES Act PPP loans, that may alter that analysis a little bit, but, you know, high level initial blush, like, I don't think laying people off is a bad thing if you don't have anything for them to do. Furlough, again, you know, seems it's not a formal termination. It's not a formal separation. It maintains that attachment, easier to restart once, you know, you can start ramping up operations. Key question there, they are not, employees who are furloughed are not eligible for the paid sick leave or paid family medical leave benefits provided under the FFCRA. That was a point of ambiguity and confusion when the law was first passed. There are some Democrats on Capitol Hill who are just livid that the Department of Labor has taken that position, which to me seems entirely common sense, that if the employer has no work available for its employees, then they shouldn't really be able to back into a paid sick leave benefit. You know, if the point of the paid sick leave benefit is to discourage people from coming to work, right? On the theory that if I don't go to work, I'm not going to get paid. If I don't get paid, I can't feed my family. Well, paid sick leave benefits were designed to sort of take that out of the equation. Stay home. We don't want you coming to work and infecting everybody else. We'll pay to stay home. If there's no work to go to, you shouldn't get, in my opinion, you shouldn't get the benefit. The benefits aren't meant for you. And DOL has really clarified that. As far as paying out PTO, you got to look at your policy. You look at your handbook and see what it says. If it's well written, it would say that management PTO may be granted subject to management's approval or at the discretion of management. Because the conversation I was having with that big interstate retailer 3 weeks ago was, all right, if we need to furlough everybody for a couple weeks or maybe 30 days, if everybody claims PTO, that's not going to help our cash flow, right? We're laying people off because we don't have any business and revenue. And if we have to pay out 3 weeks of vacation, everybody, we're no better off. We looked at the policy, the handbook, well written. I might have had something to do with that. Said management retains the absolute discretion to approve all requests for PTO. So when we issued the furlough notice, we included a statement that's saying, unfortunately, due to the circumstances, no request for PTO will be granted during the period of the furlough. You know, and at such time as, you know, we're able to resume normal operations, we'll reconsider our position on that. But there's federal and state law in Pennsylvania doesn't kind of mandate that you pay out PTO. That's a function of policy. But if your policy says that you'll pay it out in circumstances like this, which would be kind of weird because most policies don't reference if there's a furlough, you can use your PTO. But if there's something in there to that effect, you may have some legal exposure if you attempt to deny them the use of their PTO. But that is not, to me, like, oh, well, I guess I better just pay it. That's a balancing of risks because it's not like anybody goes to jail if they temporarily deny their employees PTO pay, and especially with all the other benefits available to employees, including unemployment. If they're taking the long view, they might not want to use their PTO right now with the unemployment. Health insurance benefits. Furloughs generally do not trigger a loss of health care benefits. And in fact, and this is a point I'm urging everybody listening, if you haven't already talked to your broker or your health insurer, if you haven't sort of already executed on this, talk to them to determine if we implement a furlough for 30 to 60 days, 90 days, or an indeterminate time, will the carrier view that as a reduction in hours such that COBRA coverage would be triggered? Or, as many carriers are doing, and what I've been hearing anecdotally from many clients, are the carriers going to say, we're not going to treat that as a break in service or insufficient hours such that it's a COBRA event. We're going to treat that, we're not going to treat it like that. They can continue to stay on the plan as a regular participant. Now, What that means in terms of the employer's obligation to pay their share of the premium is a different question, because I don't believe the healthcare insurer, if you have third-party insurance, can dictate to you, the employer, that you've got to continue to subsidize the cost of coverage if your employees aren't working. And typically, your plan, in terms of participation, will require that they be actively working. That's way beyond the scope of today's discussion. I just wanted to put that on your radar, because the health insurance, and by the way, Uncle Sam, and Mike's going to talk about it again, Uncle Sam is going to help underwrite those costs. But just be sensitive to the idea of what's the status of their health insurance benefits if I furlough them? Do they stay on as regular employers or the COBRA event, and who's got to pay? Last thing on furloughs, WARN Act exposure, that applies to companies with 100 or more employees who implement a plant closing or mass layoff that affects 50 or more employees at a single site of employment, where there is a job loss of 50 or more employees suffer a job loss. A job loss is defined as a separation of employment for 6 months or more, okay? So this has been tricky, because the truth is nobody knows how long this is gonna go. 3-4 weeks ago, I don't think anybody thought, I don't really know if people thought we would be up and running by Easter, as the president was sort of hoping. And we all hope it, right? But, end of April, maybe, end of May, over under might be Memorial Day, certainly by the end of June, right? I don't think in March anybody was thinking it would be September 15. If the job losses are less than 6 months, it's not a WARN Act event, and there's no exposure for not having given notice. But you should be thinking to yourself, if there's a reasonable chance that we're going to have 50 or more employees at a single site of employment out for more than 6 months, then you need to talk to your lawyer or your HR director about WARN Act notice, because it's not too late to give it if you haven't already. Go ahead. All right. Talked about this already. Layoffs, terminations, they get unemployment, they don't get paid sick leave. More common, right? More common for policies to say, we'll pay out your accrued unused PTO upon termination. If it's a layoff, that's generally considered a termination. But I want to make sure everybody understands that. Don't sort of be captured by the conventional wisdom of a layoff means, or you have to make a conscious decision. Are we formally terminating this person's employment? And if so, what do we do if we do that? And you can call that a layoff. But don't just think oh, well, I guess we need to lay people off. Is it permanent or temporary? I don't know. You need to make a decision. Do you want it to be permanent or temporary? And then use the right label. If it is an actual separation, it's obviously a COBRA event. And I've already talked about the WARN Act notice. Just quickly, Jared, before you move off that slide, WARN Act notice may be necessary. The unforeseen business exception that gets tossed around a lot. This is obviously, I think, an unforeseen business circumstance, and businesses can be forgiven for not giving the 60-day advance notice that the WARN Act requires. But that exception doesn't mean you don't have to give notice at all. What that exception says is you're supposed to give as much notice as is reasonably practical, and that notice still takes basically the same form as a regular WARN Act notice, and it still goes to the same entities, including the employees themselves, the chief elected official of your town or city, whatever you're operating in, and the state dislocated worker unit. Go ahead, Joe. Well, here we go. We just went through a lot of this. With the WARN Act. So just quickly, I think these slides are going to be available, so I won't use more precious time covering this because I already did. We can go to the next slide. And I will turn it over to Mike Meehan to take us through the CARES Act.
Hi, good morning, everyone. My name is Mike Meehan. I'm a partner in Fox's Corporate and Financial Services Group. I would imagine at this point here on April 9th, you've attended one or more webinars that take you through this legislation that was signed into law at the end of March. This is not going to be that. I have some informational slides here because this will, you can take the materials with you, but I want to work through these to kind of get into some of the current questions, either based on recent SBA guidance. Beginning on April 3rd, the application process got underway. I think some of the questions you may have had a week or 2 weeks ago, a little more advanced now that you've gotten into the process, talked with your accountants, attended a webinar or two or more on the issue. So Jared, I'll have you move through these slides fairly quickly and go ahead to the next one. The CARES Act provides a number of financial resources, most under the SBA programs. When evaluating those initially, everyone has continued to focus on the Paycheck Protection Program. The primary reason for that is the loan forgiveness element. The fact that you could be sitting with a $0 bill at the end of this at a time when you need it the most. So I want to start there and really focus there because that's where the application process is underway. I want to go through kind of generally speaking who's eligible, the application process, some kind of hot button issues we've seen there, and then focus on kind of the use of proceeds and the loan forgiveness element, which everybody's focused on, right? We're going to go now to the application. We're going to find out who's eligible. But once we have those proceeds, now the fun start, right? Now we have to really document how we're using these so that 60 days from now, we don't have any issues asking for that money back as opposed to having to pay it over time. So from an eligibility standpoint, I think the most important thing to focus on here is the Paycheck Protection Program expands eligibility for SBA loans. If you're already eligible for an SBA loan, if you're already considered a small business concern, that's the end of the inquiry for you. So the SBA traditionally does that. There's a chart in their regulations. They do it by NAICS code, and it's either based on your revenue or it's based on your number of employees by industry. Some industries already have an employee count or employee threshold that's higher than 500. If that's the case, you're done. If you have 1,000 and you need to have 1,500, you're still a small business. And that's caused some confusion. Now people say, well, do I need fewer than 500 employees to apply? Sort of, but not really if you're already a small business. What this does is expand it and now say, if you're in that industry code, that calculates it based on revenue. If I'm a medical practice, for example, a physician practice, I need to have 12 million or less revenues annually in order to be considered a small business. Not a lot of medical practices with 501 employees that are generating that type of rate. So really what it does is expands those folks to the 500 employees. The 500 employees threshold has come up because the CARES Act and the interim final rule don't give a ton of guidance on when I calculate those 500 employees. As Bob just alluded, headcounts are shrinking across the board. What happens to the company that had 600, but now it has 450 as a result of layoffs and furloughs? The CARES Act and the interim rule don't provide a ton of guidance on when we calculate those 500, but the traditional SBA rules would say essentially you calculate the same way you calculate the payroll cost. It's an average over the preceding 12 months. So that average, if I recently had a significant reduction, if I take that average, and I went from 600 to 400, but the first 11 months I was at 600 or close, I would say conventional wisdom says you're probably not at 500. Now, the SBA for the Paycheck Protection Program, again, under the CARES Act and under their interim rule, they haven't provided that specific interpretation saying those SBA rules will apply. But just earlier this week, they have put up, and if you haven't seen it on their website, I would recommend visiting it, particularly if you're an applicant. There's a frequently asked questions link that they've been updating periodically. And question 14 on that, if you check it, kind of goes into this issue and says, I think we are going to be looking at that rolling 12 months for the 500. So things like that have been coming up or are important. The other thing for eligibility is the affiliation rules. They have made clear under the PPP that the affiliation rules, other than for industries in the hospitality at restaurants and hotels and such. Outside of them, where the affiliation rules are waived, the affiliation rules on the SBA will apply. Now, what does that mean? If I'm evaluating whether you're a small business concern, I'm going to look through to all of your affiliates to make that calculation. And the affiliation generally means there's no, as long as I am together with the 500, if I count all of my affiliates, my owners, people who control me, that's the threshold for evaluating. If I myself, as the applicant, don't have it, don't have the 500 employees, but together with all of my parents and people that controls I do, that's what people mean when they're talking about the affiliation. So go ahead, Jared, and switch to the next slide. The application process is pretty far underway, at least for businesses and LLCs and a lot of you. For those who are an independent contractor or self-employers, that application process is beginning tomorrow. But a lot of you are underway in your applications. So you've seen it, it's fairly short relative to a traditional SBA loan. A couple of things, question we've gotten a lot lately as the application process rolled out is, do I have to have a pre-existing relationship with the bank that I'm applying to? Under the law, the answer is no. But practically speaking, the answer has come to be, at least in the short term, a lot of banks, because of the demand, are saying, so at the end of last week, only 2 banks, it was Bank of America, and I think for a time, it was JP Morgan Chase, had it up and running. So everybody who's looking at the newspaper headlines that say this program is going to run out of money are flooding to the, how do I get it there? And the response was, we're only at this time accepting applications from our existing customers. That has relaxed some, but I do think, practically speaking, you're better off starting with a bank that you have an existing relationship with. The other thing I'll say on application is, early in this process, there was a discussing of timing. When's the best time to take this loan? When's the best time? Can I apply now and maybe push it out till May 1st, May 15th, the closing, and work with my bank to get the money later, maybe when I can have my employees a little bit more engaged with more business. Just yesterday, the SBA updated that frequently asked questions. It's the last question on there, to say that the lender has to fund the loan within 10 days of its approval. So I think that's going to hamstring a lot of folks that are trying to time it or get approved for the loan, but want it to originate in June 1st. And that kind of makes sense, because you're certifying in the application, I need this. There's a downturn and I need this now. So that's really, we could address questions, but that's really, go ahead, Jerry, to the next slide, and we'll go through. The only other thing I'll say on application is for the lender review and underwriting. You're going to make certain limited certifications in that application. The SBA has made clear that the lender is entitled to rely on those certifications. So when I say this is my average payroll cost, I mean, practically speaking, there is an underwriting component, and the lender should be looking into it, but they can kind of throw up their hands and say, this is what they certified that they had, because the idea is for this to not be an exhaustive process and to move it forward. So go ahead, Jared. The terms of the loan I'll leave here. I mean, those have been mostly been covered. They did recently adjust the interest rate to 1% at the end of last week. But I want to move on to the uses of the loan and the next slide. Now I have the loan. What am I allowed to use it for? Intuitively, I'm allowed to use it for payroll costs. I can use it for what I've gotten, what the loan amount's been based on, and also these other elements. As long as I'm using it for these permitted uses during the 8-week covered period, I have a claim to seek forgiveness at the end of the loan. That 8-week covered period from when the funds hit your bank account is really the operative period. We have advised, to the extent it's feasible, to open a separate bank account to receive those funds. Practically, not everybody can do that based on how they're set up, but that makes sense to me. When 60 days from now, I'm going to have to show somebody how I used it. Being able to track each one to say I pulled payroll from here, or we paid our rent out of here, or whatever it is. Go ahead, Jerry. So these next two slides we can skip through just because I think they've been covered, but it's what can I include within the definition of my payroll costs. The group healthcare benefits is one that comes up a lot. It's not just the salary, right? But working with your accountant to say, you know, what costs am I paying toward my state and local payroll taxes or retirement benefits. I saw a question come up here on, can I count, you know, if it's a self-funded claim, can I count the cost? Can I count what I've paid towards out towards claims? And my honest answer is I'm not sure. I think it would be averaged. The guidance that we have is payment for the provision of employee benefits consisting of group healthcare coverage, including insurance premium. We can maybe address that, you know, in the Q&A, but I'll cue that up for Bob to ponder as he seems to be doing. And we'll, but generally speaking, these payroll costs, anything that fits within that statutory definition, I'm allowed to use the loan for those proceeds, the loan proceeds for that purpose and for no other purpose. Go ahead and skip through, Jared. Again, I think these have been fairly covered. What's excluded, the payroll taxes. I want to get to the next slide in the forgiveness and kind of run through how this works in practice. So now I'm at the end of my 60-day period. I've used my loan proceeds the way I'm supposed to. Now what do? I'm going to apply for forgiveness with the loan. You're going to go to the same lender who gave you the loan and apply for forgiveness. The way that, if I've used it for permitted purposes, I can really get tripped up on the forgiveness component in two ways. If there's been a reduction in the number of full-time employees, and if there's been a reduction in my employee wages. So on the full-time employees, I'm going to look at my initial period is the covered period, that 8 weeks. And then I can look back to one of two periods historically, either February to June of last year or January and February of this year. And if there has been a reduction in that, in that ratio between the covered period and those historical periods, then my loan forgiveness can be reduced by the amount of that fraction. And likewise, I think for a primary purpose of saying, look, I didn't lay everybody off. I still have the same headcount, but we've cut the salaries in half, or we've cut the salaries to some. There's a kind of a materiality component of the reduction in employee wages. So if I have my same, say, full-time employee headcount, but I've reduced the salary of an employee who has made in 2019 an annualized amount of less than 100,000. If I've reduced their salary, then there can be a proportionate reduction if that reduction in salary was more than 25%. So really, practically speaking, I'm happy to go through any specific questions on the loan forgiveness. But the way it works is at the end of the period, I'm filing my application with the lender, and I'm going to give them certain information. I'm going to show them how I use the proceeds. I'm going to tell them what my full-time employee headcount is now relative to that historical period. And I'm going to show you historically, I'm going to show you the salaries versus historical salaries. Now, that probably covers a handful, the next couple slides that we can keep for informational purposes to be circulated. All I'll say in addition to the loan forgiveness is this is where I've seen a ton of people trying to find loopholes, right? What if I lay somebody off, hire somebody else, and then make it, cut their salary by 50%? Have I done it? A lot of times the answer there is we're not sure. If you're going to play games with it, you're going to be relying on making a statutory argument to a loan officer at the end of it. And so we try to stay as close to keeping tracking as possible. Jared, go ahead and skip through. I'm going to turn it back over to Bob because I want to make sure we have time to cover the FFCRA and the new developments there. As far as just very quickly addressing the other state and local, I would say that there's the CISA element, there's the some state and local. The Paycheck Protection Program is where a lot of it's driving. If there are specific questions on those other programs, we can cover them. But in the interest of time, Bob, why don't I turn it back over to you, and I'll get you into the FFCRA so we have time for questions.
Sure, thank you. And again, right now on the screen, you see one of the dreaded things all lawyers hate, a slide relating to math. If there are questions later about how how the calculation works in terms of determining what does a reduced head count in the 8 weeks after the loan is originated, how does that impact forgiveness? We'll make sure we leave some time at the end of the program to help you through those computations. But sort of high level, that's what Congress is interested in. They expect employers who borrow the money to use it to fund payroll costs. It starts with a presumption of 100% forgiveness that is abated down depending on how many fewer employees you have in the critical period after the loan is originated. So, Jared, maybe we can slide down to 23. Mike, did you want to add anything about these so-called idle loans?
I can very brief. I mean, I think those actually got rolled out even sooner. So the most common question I get on those now, Bob, is can I take both? What if I already applied for one, or can I still apply for? I mean, I think generally the guidance on the interim rule is if you've already, the IDL in all likelihood is getting rolled into your paycheck protection loan. And when you're calculating the loan amount, it gets rolled in less than 10. If you took the $10,000 advance that's forgivable, that doesn't need to be repaid, that gets backed out. After the fact, the general guidance is as long as I'm not taking it for the same purpose, as long as I can show, and that goes back to documenting the uses of both. The answer tends to be yes. Originally, it wasn't the case, but if I am able to show that I used the loan for another permitted purpose, that's the guidance, and then the balance just gets kind of refied in. Which, if you previously used an EIDL loan for payroll costs, you want it rolled into the Paycheck Protection Program because of the loan forgiveness factor.
And then, Jared, can we just walk back to number 22 briefly? Just to put this on everybody's radar, and again, lawyers, we try to stay in the lawyers' lanes, and everybody is accountants, and your accountants, I'm sure, are keeping you abreast of the tax and accounting side of the CARES Act and all the other federal and state laws that are coming down. Just wanted to highlight for everybody, as an alternative to the loans under the PPP, there is a refundable payroll tax credit for employee retention for businesses affected by COVID-19 and related closures and loss of business. There's details there about the amount that can be claimed. That is separate and apart from the tax credits that businesses can take for funding paid sick leave and paid family medical leave benefits that I'm going to talk about in about 15 seconds. But I just wanted to, I didn't want this slide to kind of get lost in the discussion, because there are, look, if there's money out there, everybody's paying taxes, right? So, if there's money out there that Uncle Sam is sort of, putting back to take advantage of, we at least want to put that on your radar so it's out there. All right, Jared, why don't we go down to 25? Okay, so I know another partner of the Family Business Center gave a presentation on this law last week. It seems like old news at this point, enacted, my God, it's 3 weeks ago. It sunsets on December 31. That means, as it stands right now, and that could change, the paid sick leave benefits go poof if they haven't been used. The employer's obligation to pay employees paid sick leave for qualifying events also goes away. Could that get extended? Very possible. But for present purposes, as you know, the paid sick leave provisions became effective last week on April 1. I think it says the April 1. The Department of Labor issued temporary regulations. It's a mouthful, 125 pages. Before that time, lawyers, and I think everybody, was sort of going off this wonderful Q&A document that the Department of Labor Wage and Hour Division has issued and been updating. And I can tell you, we're very lucky, from my standpoint, editorializing a bit, we're very lucky to have the team that we have in the Department of Labor right now. The head of our department has a long-standing professional relationship with the current administrator of the Wage and Hour Division. And you know, the Department of Labor had this law dumped on it on March 18, and they were tasked with sort of fleshing out, you know, some of the gaps and answering ambiguities, and they've been very responsive to the employer community in terms of getting questions answered, and that DOL Q&A document, as I mentioned, is a gold mine of information. Go ahead, next slide. So if you're on this call and you have fewer than 500 employees, you are covered. Even if you have fewer than 50 employees, you are covered, and you are absolutely covered with regard to the paid sick leave benefits. Even if you only have 9 employees, you're covered by the paid sick leave benefits provision. There's an exception to the paid family medical leave benefit, which is a separate entitlement. And I'm going to step through these briefly. I think, though, if you attended last week's program, you already know. If you've got fewer than 50 employees, you can deny leave to employees whose absence would jeopardize your viability. And there's sort of a 3-pronged test that you need to satisfy. You don't ask for permission. You don't go to DOL and say, hey, I think I might qualify for this exception. Am I okay? This is an ask for forgiveness model. And by the way, until April 17, the Department of Labor is taking a sort of forgiving approach to enforcement. And let's be honest. I mean, look, I've been practicing a long time, as I said. You know, Department of Labor initiated audits are much more rare than employee generated complaints and intervention by plaintiffs' lawyers on behalf of employees who say that their rights have been violated. So it's nice that the Department of Labor has said, we're going to take a very kind of hands-off, gentle, you know, advising employers if they're out of line up until April 17, rather than throwing the book at them. But usually when the book's being thrown, it's by some private lawyer, not the Department of Labor anyway. So it's not like you have amnesty and you don't have to comply until April 17. Just that Department of Labor isn't going to crucify you for it. So that's the conversations I'm having with some of my clients right now are like, I think, well, definitely I have fewer than 50 employees. That's easy. It would be a real hardship. In Pennsylvania, the governor's ordered all schools closed, all, I think public and private, but definitely public schools closed through the end of the month. If all of your employees have school-age kids and they all want to take time off at the same time, I've got no employees. How do I work? How do I operate? This exemption gives you an avenue to try to keep your business running. And what I would advise is to try to stagger the leaves, right? Just say, look, I can't have everybody out at the same time, but people, can we, you know, come to it, like, you know, how about one day a week? How about you get this week, you get the next week? Next slide, please. So the main point here, certain employees not covered, is that first bullet point, which I would say until, I don't know, early last week, it was not clear that employees who are not working or teleworking due to furlough, layoff, or any other reason would not be entitled to it. If the business is otherwise closed, then they can't, as I use the expression, kind of back in the paid sick leave benefits. It's only oriented towards people who cannot work because they have a qualifying event. And let's go to the next slide. And so what are these qualifying events? They're unable to work or telework because the employee is subject to a federal, state, or local COVID-19 quarantine or isolation order. That's what the statute says. And when the statute first came out, there was confusion that, well, wait a minute, I mean, if my business is deemed non-essential, my company shut down, does that mean no? The answer is no. That has to be directed to the employee. 2, they're unable to work or telework because the employee has been advised by a healthcare provider to self-quarantine for a reason related to COVID-19. That's a no-brainer, right? You don't want that person coming to work. That's the person who should stay home and who Congress wanted to make sure wouldn't starve because, you know, they were taking one for the team, not coming to work. Number 3 is sort of similar to that. The employee is experiencing symptoms of COVID-19 but doesn't have a diagnosis, but he's waiting for a diagnosis. If employees fall in one of those 3 buckets, one of those first 3 qualifying events, they get paid out at full pay up to $511 a day or $5,100 total. That might be $5,110, but go ahead, next slide. Now, if they're unable to work because they need to care for someone who falls under 1 or 2 on the previous page, that's a qualifying reason. If they're unable to work or telework because they need to care for a child where the child's school or place of care is closed, right? But that assumes you're open for work, and it's just that they can't come to work because of that. In those circumstances, employees get 2/3 of their regular rate of pay, up to $200 a day. So it's less. And number 6, there are no conditions yet. So skip number 6. Let's go to the next slide. What's not covered? Anything other than the 6 events I just walked through, and it's really only 5. An employee's generalized fear that it's not safe to come to work. I don't want to come to work because I don't want to get sick. I don't want to infect someone in my home. Those are not good grounds under the paid sick leave provision of the Act. It's not considered protected activity for a single employee to say, I don't think it's safe to come to work. And I have a client right now, I don't think they're a member of this organization. I know they're not on this phone call or this webinar, where the first person to put her hand up and say, I don't think it's safe to come to work. I don't want to come to work. I want an accommodation, was the HR director, which was really kind of tough. She has an office. She sees most of her job is like mine, on the computer, on the phone, very few in-person visitors during the day. We told her, sorry, you got to come in. Like, you got to come in, and that was not a fun conversation. But we were within our legal rights to compel her to come in. We didn't fortunately get to that point with her, but employees who refuse to work in those circumstances may be subject to discipline or even termination. And I have a client in New Jersey last week. The conversation was, if she doesn't come in, she's refusing to come in, we're going to have to tell her we're going to accept it as a voluntary resignation. If she does, I'm not resigning, you're firing me. Okay, you call it what you want. You're done. You're done. We sent her a termination letter on Friday. We'll probably get a claim. We feel very comfortable defending that case. She was a healthcare provider, which I'm not going to talk about because I don't think we have any healthcare providers on this call. But there's no question that we had the legal right to compel her to work. Be careful about group refusals to work, okay? My favorite subject, the National Labor Relations Act applies to you if you're a private business. It doesn't matter if you don't have a union, right? The National Labor Relations Act protects group refusals to work. So if 2 or more employees say, hey, we don't think it's safe to come to work, we're not coming in unless and until you either deep clean the site or give us hazard pay, as we've started to hear about, like at Amazon up in Staten Island last week, and Instacart and other, that's been in the news, right? They have the right to do that. Those employees have the legal right to refuse to work based on their concerns about workplace safety, or frankly, even if they just want to try to bring pressure upon you to increase their pay. Now, you have the right to replace them if they refuse to work. You don't have the right to fire them, okay? So just be careful. If you have a concerted refusal to work by multiple employees, you should absolutely talk to your labor lawyer about that, because that's a much different situation than one employee. Go ahead. So the family medical leave, just quick. So separate and apart from paid sick leave is this expanded paid family medical leave, which is up to 12 weeks. That counts. This is interesting. It's the same bucket of leave that if you're an employer with 50 or more employees, this was a recent clarification from the Department of Labor. If you have 50 or more employees, you already have to give your employees 12 weeks of family medical leave. But if you're already covered by the FMLA, you don't have to give employees another 12 weeks. It's the same 12-week bucket. It's just now, if it's for that single qualifying event where they have to stay home, and regular FMLA, they have to have worked for you for a whole year, right? Now it's only 30 days. And the only qualifying event is they cannot come to work because your kid's school is closed, or the employee's, kid's school is closed, or they don't have childcare provision. By the way, if they have somebody else in the household who could provide that care, you can deny it on grounds that, well, they can provide it. The problem is if it's, two spouses and they both work, then it's kind of like, I'm not telling clients to fight that battle. But if you have fewer than 50 employees, now you do have to sort of create this 12-week bucket of paid FML for your employees, even though you're too small to be covered by regular FMLA. The pay caps out at $200 a day, which doesn't seem like much, if you're, making $50,000 or $60,000. But if you're an employer, 10 weeks at 200 a day is 12 grand, which, that's kind of an eye opener. Next slide, please. So 80 hours is the paid sick leave entitlement. They have an absolute right to take that. If they have one of those qualifying events, they have an absolute right to take federal paid sick leave. You cannot require them to use your sick leave or your ETO or their vacation or Philadelphia paid sick leave. If you're in Philadelphia, that stacks. Those benefits can't be run concurrently. However, next slide, Jared. So I just told you, you can't make them use PTO before using paid sick leave. With regard to paid family medical leave, it is very clear that an employee can sort of top off their pay by using vacation or other sick leave, because, at $200 a day, again, if you're making, $65,000, $75,000, $200 a day is not going to make you whole. So if you've got PTO or sick pay that you want to tap into to make yourself whole, they can do that. Less clear is whether employers can require employees to do that. I don't know the answer to that. It's very, the way the regs, the way the law and the regulations are written, it doesn't say you can, but it doesn't say you can't. And with respect to the paid sick leave, it says employers cannot require employees to use other. So they know how to tell employers not to do something when they want to. So I think it's defensible that, they didn't tell me I can't require to use PTO, and in regular FMLA, I can require employees to use PTO concurrently. I think it's a defensible position to require employees to use, PTO concurrently with the paid family medical leave act, but it's not certain. Next slide. All right, employee tax credit, very important. If you should not have signed off yet. I know it's 10 o'clock. This is big. So the whole point, not the whole point, but Congress sold this to the employer community in part like, don't worry, you're not going to have to pay for the paid sick leave and the paid family medical leave anyway. Uncle Sam will reimburse you. And we've known for 3 weeks now that the mechanism would be a tax credit, right? And I don't personally file quarterly taxes, but if you're an employer, you have to file your, I think it's form 741 with your quarterly payroll taxes and other taxes that you have to file. And yes, it's a refundable tax credit, and it's a refundable credit, meaning even if you aren't operating at a profit, or if you're not for profit, if you're losing money, it's a refundable tax credit, meaning Uncle Sam is going to make you whole for the cost of the paid sick leave benefits, even if you don't otherwise owe taxes. What is great, and what I literally just learned this morning preparing for this, is that the IRS has issued guidance. Of course it's the IRS. It's a 66-point FAQ document, right? Some things don't change. I've put a link to an alert that one of Mike and I's partners issued the other day that will take you through the IRS guidance on the tax credits. I think the important takeaway for this is, I just want to wet your whistle a little bit here, is that they're allowing employers to actually offset against the taxes due. So if ordinarily, as I understand it, if you would owe $40,000 in quarterly payroll taxes, and at the end of March, I think they extended it for March, or at the end of the second quarter, ordinarily you'd be remitting, taxes of $40,000. but you paid out $14,000 in paid sick leave and paid family medical leave, the IRS seems to say you can just take that off the top, the $14,000 in paid sick leave benefits off what you owe us if you meet certain criteria and certify that you used it for that. And there's forms and there's a lot to cover in 66 points. Take a look at that alert at that link, and that will give you a lot more detail on how to do that. And of course, your accountant, can help you with that. Next slide. Last week, 2 weeks ago, the Department of Labor made their Notice of Employee Rights available under the FFCRA. Looks like that. It's available on their website. It's an excellent resource. I still look at it when clients ask me questions, but that should have been posted by now. And if all of your employees are working remotely, you should email that to them or put it on your website where they can get it, because the department wants employers to let employees know their rights under the law. Next slide. Yes, it could all change. Congress is already talking about CARES 2.0. The Mike mentioned the $350 billion might not be enough. They're talking about supplementing that. There's going to be partisan bickering. The Senate is in recess until April 20. I had kind of hoped, frankly, that we might get a reprieve and not have to digest 850-page bills like the CARES Act over a weekend. So we're prepared to talk about them on Monday. But they may do some additional lawmaking later this week, into next week. They're going. I would be very surprised if they didn't appropriate more money for this program, because they don't want it to run out, and that's that. Next slide. And then where can you get additional information? CARES Act, that's a good site. The various sites, DOL has a handle in administering the FFCRA. I would keep watching OSHA. OSHA's been a little quiet. They have not yet, like a question I sometimes get is, well, wait a minute, isn't there like a standard? Like, what's the standard if someone comes to work and they're symptomatic? Do I have to close? There is no standard. The OSHA hasn't spoken to that directly. CDC hasn't spoken to that directly. You should keep abreast of their guidances coming out of those agencies, and under the heading of Rip from the Headlines, one of our colleagues reported this morning that just yesterday, CDC issued a new guidance. I'm just going to give you the title so you can search for it. Interim Guidance for Implementing Safety Practices for Critical Infrastructure Workers Who May Have Had Exposure to a Person with Suspected or Confirmed COVID-19. It doesn't say you have to shut the business down. It doesn't say you have to close your doors. It doesn't say you have to issue everybody out in an orderly fashion. It actually kind of tracks with common sense about if someone, if someone, what it really says is, if someone reports to you that they've been exposed, they should self-isolate for a short period of time, but given how difficult it still is to get tests, you don't have to make them get tested and come back with a negative test before they come back. CDC is talking about, well, you can have them come in if they're asymptomatic, take their temperature. If they have a temperature, send them home. If they don't have a temperature, you can let them come to work, but you must make them wear a mask. So CDC has issued guidance. I think this is within the last 24 hours. So I would encourage you to sort of keep abreast of that and look for that. And I think that's all we have, but we certainly can answer some questions. Mike, do you have any kind of parting shots or closing thoughts?
Maybe I'll just insert here. Thank you, Bob and Mike. I'd just like to go back to that question that Mike, you brought up, that was asked if the attendee's still on, to see if there's any more clarity on this question. And that was, can employers with self-funded health plans count the cost of the claims they pay toward their payroll cost for the Paycheck protection loan? Is there any clarity, or is that still a fuzzy?
Mike, unless you have supreme confidence that you know the answer to that question, I will take a stab at it.
Yeah, please.
Okay, so that's an excellent question. And the short answer is, it's not clear. When we saw that question come into the queue, I quickly tapped out an email to a couple of my colleagues in our benefits department. I got 3 responses, and they're all different. So the first one, says not 100% clear, but probably not. The definition of payroll costs on this point refers to payment required for the provision of group healthcare benefits, including insurance premiums, appears targeted at premium costs, not the cost of paid claims. Another colleague said he thought that sounded right, and the amount of claims paid out would be, if you were allowed to do that, it would be disproportionate, because let's be honest, I mean, depending if it's a serious claim, you know, that could be a big dollar number. My own personal sense is probably not, but you know, stay tuned for additional guidance that could come out. You know, again, the CARES Act was passed on March 27. You know, guidance continues to come out from Treasury and SBA. And I just don't think that we have a very clear answer to that question at this point. I don't know.
Yeah, I think that I think that's right, Bob. And it's also just to keep in mind, you know, the certification element of it, right? Like, to Bob's point, if it's $1 million claim, it's a little different than if you can kind of, it's average over the 12. So it's really going to jump off the page to where even if you have a good argument, even if I could pick apart the word, I'm going to make that to a loan officer at TD Bank or something and convince him that I'm right. And Bob just said, there's no convince, like it's going to be the SBA making the guidance. And unfortunately, in some of these issues, we just have to stay tuned.
I had a clarifying question back on, you didn't mention it on slide 17. I thought it was actually a really important point. The second point, it says loan forgiveness will not be reduced if it's remedied by June 30th. So I know there's a lot of people trying to figure out, well, I did reduce it and what does that mean? But it seems to be saying if it's remedied by June 30th, you don't need to worry about what you did prior to that. Can you clarify that?
Sure, that's the reading as it is right now. So if I'm back, if as of June 30th, I have fully restored my FTE count in that covered period relative to the prior, and I've brought everybody back to salaries, then what the SBA said is we're not going to ding you for what happened during that period, because the end result, the end goal of the resolution of the legislation has been met. We've got everybody back to work. Everybody got their payroll, and you know, but as we alluded to, there's putting that into practice isn't always people will say, well, what if I got it really close but I didn't get everybody? What if it was, you know, they do on the salary reduction, they provide a little bit of a buffer, as I alluded to. It's the 25%, so that helps us look, is this material or not? But there are a lot of, and Bob and I have been on the phone on these in terms of, hey, when we do this, how is this going to work in practice? We don't have a ton of guidance on it, and I think it's kind of evolving. Bob, I don't know if you have anything to add on that part of it.
So I would just say this. I think there's, can you go down to the next slide, Jared? Yeah. So this is the slide I kind of rushed through earlier in the presentation, and I'll go through a little more slowly here, and certainly, you know, Mike has a different perspective he'll share. But again, high level directionally, Congress wants you to use the money to pay your people. Payroll costs. We've talked about what payroll costs are. They're you know, and as I said, the presumption is we'll forgive the entirety of the loan as long as you use it for payroll costs on your people. And we're going to be looking at the covered period 8 weeks after the origination of the loan, right? So for purposes of determining whether you use the money at the time they wanted you to use it and for the purpose they want to use it, they're going to look at your head count and your payroll costs in the 8 weeks after the origination of the loan. And they measure what's your head count during that period relative to some other measuring period, either between January 1, 2020 and the end of February 2020, or some other measuring period last year, right? And if you know, pre-crisis you had 11 employees, and in the 8 weeks after you get the money, you have 11 employees and you're paying them the same, then you're good. 100% forgiveness. Where I think it's a little ambiguous is, let's go back to slide 17. That but, right? Loan forgiveness will not be reduced if reduction in employee headcount is remedied by June 30. So I I myself think it is still unclear. Does that exception kind of swallow the rule that we just stepped through of 8 weeks? Now, let's just sort of think practically. It's April 9. If you get the money on April 12, which might be optimistic, then, or yeah, April 13, 8 weeks forward is already June 12. So again, no one has a crystal ball, but I think, and Mike, you tell me if I'm wrong, if you use the money and you're fully, staffed up for that 8-week period, you should get 100% forgiveness. Even if you then, scale back down a little bit, maybe, you scale up, in anticipation, and then Governor Wolf says, nope, I'm extending the shutdown through July 4. Oh man, okay, thought we were going to be clear at the end of June. The June 30th arguably is a safe harbor that even if you're not fully staffed up for that 8-week period, as long as everybody's back in bed by 11:59 on June 30, at the previous rate of pay, I think it can be read that way, but it does seem inconsistent with the 8-week covered period. And I'm not 100% sure that you can just forget about the 8-week covered period. Mike, do you have any further thoughts on that?
No, Bob, I think that's right. I think it's to be determined, and particularly if we get an extension, right? If they tack on some additional funding and there's some clarity on what, because now you're taking your 8-week period is potentially extending beyond June 30, and you're gonna have to, there's gonna have to be some sort of clarity into how it will work. But I think generally, the one thing we didn't, there's specific guidance on the payroll costs. You have to use at least, it says right on the application, at least 75% of the payroll costs to be used towards of the loan amount to be used for payroll costs. So you get into this, like Bob said, if you have everybody fully staffed, if you have it, and I could show all my loan proceeds, haven't I met the part of this? That's really what you're left. But again, you're left making the argument on a couple pieces of paper submitted to a loan officer who has very similar stack of pieces of paper from all his other clients. So it's just, we'll continue to monitor the guidance, and it's been coming out daily. So I think hopefully we'll get clarity.
Back to Jared and Sally to wrap it up. I would say, with every passing day, that question I think is less pertinent in the real world, because what's clear is that you have to use the loan proceeds mostly for payroll costs, as Mike said.
Exactly.
And you've got to use it for payroll costs incurred between February 15 and June 30.
Yep.
I still haven't talked to anybody who thinks it would make sense to use money you get next week or the week after to fund something that you incurred in February or March. So I think most people are going to be using it for the 8 weeks between whenever they get it and, sometime in June. So I think the problem will largely take care of itself. Just because that's what you have to use the money for.
Correct.
But that's the guidance continues to come out. It's 850-page bill passed very quickly. Some ambiguities. The departments, Treasury, the SBA are charged with trying to resolve some of those. And like Mike said, we just have to stay tuned. Thank you.
Well, Mike and Bob, we really appreciate you being with us today. We appreciate you doing all of this, studying these long documents and being able to adapt and translate them to us, and the interplay between the two of you. Also, we will note that we will have these things again, the slides and the audio and the video on our website later today. And also the document that Mike alluded to, the SBA FAQ, will be there, as well as other things. So thank you. And want to invite you all to our next two upcoming webinars. Some of you heard Ian Meerderks present on Tuesday on the stock market. So if you want to hear more about that, tomorrow at 2 p.m., there's going to be a webinar with Ian and also Brad Penault. He's the VP of Capital Market Strategy at Fidelity Investments. They're going to provide their perspectives on market conditions as well as strategies to consider in the current economic environment. That's tomorrow at 2. And then Tuesday, April 14, Paula Barrett and Ryan Hurst from RKL are going to present on Beyond Survival, how to adapt your family business for sustainability. So we're moving towards just surviving and really how can we be sustainable. So thank you again, everyone, for joining us, and we look forward to seeing you soon. Best for your day. Thanks again, Mike and Bob.
Thanks, everyone.